All right, y'all ready to start back? Ooh, we're a minute late. Now, if you thought we did a lot this morning, wait till you see what we're going to do this afternoon. This is page 1 of what we're going to do this afternoon. We're going to go through a couple of more definitions that we didn't talk about this morning. We're going to spend a little bit more time on the opt-in folks. We're going to talk about how to handle a family inheritance or family transfer. We're going to talk about loaner vehicles. We're going to talk about the different rate that we charge for the nonprofit organizations. We're going to talk about rental cars. We're going to talk about the few exemptions that exist in this bill. We're going to talk about the active duty military. We're now to page 2. Penalties and interest. Spend a little bit of time, not much, but a little bit more time on appeals. We're going to talk again a little bit more about our Welcome to Georgia folks and how that process works. We're going to spend some time on lease vehicles. I'm going to go over ETR and how it kind of plays in all of this new stuff. And then we're going to spend some time on distributions. After break, if time runs like it's been running through most sessions, I'm going to have Crystal come up for a little while, and she's going to give you some screenshots. We tried doing live gratis, and because we're having to use the test region, it wasn't always dependable depending on what was happening back at the office. So we're actually using screenshots, but she can walk you through how some of these transactions are going to look on gratis when you get gratis and how you get there and those kinds of things. So I'll put her up. Probably we'll get through ETR before break. Looks like a lot of stuff, but some of it doesn't take very long. Then I'll put Crystal up, and then we'll talk a little bit more about distributions. And then if you're just not ready to go home, we'll find something else to do. But I expect by then you're going to be ready to go home. And I expect by then I'll be more than ready for you to go home. So I don't get tired of talking, but my feet get tired by the end of the day. So I need a stool. Well, I had one somewhere, and I kept kind of falling off of it. I think it was in Columbus the other day. Not very graceful, so it wasn't really the best place for me. All right, one of the definitions, and we talked about that a little bit this morning, is the date of purchase. That's the date we're running off of. So, as somebody asked the question this morning, somebody buys a car late December, and really in the next 3 years, these dates are really important. They buy the car in late December. Do I use the date I bought the car, or do I use the date I applied for the title? Well, it's the date you bought the vehicle. So that's the date. Now, that puts you guys in a little bit of quandary if you think somebody might be lying to you about what the date is. We've already discussed our definition of a motor vehicle, so again, it's those self-propelled titled vehicles. When we talked this morning about the new motor vehicle, we talked about if you had a brand new car that had never been sold before, and the value didn't appear in gratis yet, to use the bill of sale. But that new motor vehicle definition means any motor vehicle which is not a demonstrator and has never been the subject at retail to the general public. So that's when you would use that the only time you would use the bill of sale if gratis didn't occur or didn't populate a value for you. With a used car, we'll talk about that one in a minute. When we talk about interest and penalties or timelines, a month means a period of 30 consecutive calendar days. So a month doesn't mean 31 days because one month has 31 days, and 28 days because February this year only has 28 days. A month is always counted in 30 consecutive calendar days. So when we're calculating penalties or when something's due, we're always going to do that 30-day count. Now, the used motor vehicle means any motor vehicle which has been the subject of a sale at retail to the general public. So if a value of a used vehicle doesn't populate in gratis, you have to use either at that point you use the bill of sale or the used car guide, the NADA guide, whichever of those is higher. Very good. I didn't know you had a test, right? Now, we talked about this morning and probably beat this horse, but I may even have some folks who weren't here this morning. That's happened in a few sessions. that the owner of a motor vehicle purchased in the state for which a title was issued, owner after January 1, 12, and prior to March 1, 2013, may elect to opt in. Now, we talked about how we figure out what they need to pay. So you have the vehicle value minus trade-in times 6.5% if it's a dealer sale, and this would be in the first year, or the vehicle straight times the rate if it's a casual sale, and what the credits are. And if that calculation, you've applied those credits, is more than what the title tax dude gets to opt in, doesn't have to pay anything else. If it's less, it's his choice. He doesn't have to opt in if he doesn't want to. But if he wants to, he's going to have to pay the additional money due. But if he chooses not to opt in, he needs to understand he's going to stay subject to that old ad valorem tax. So he doesn't just get to not do. Now this is an affidavit, and these don't show up real well. Sorry, I told y'all every time I tried to do something creative, it acts ugly. Blow it up a little bit. Hopefully it won't freeze on me. Maybe it did. This affidavit basically says, I am the owner of the vehicle. It was purchased in Georgia. I received this vehicle from an immediate family member or wherever I got it, but I want to opt in. You'll also notice down here, this last line says, any person who falsifies any information in this affidavit shall be subject to a penalty not to exceed $2,500 as a state penalty and not to exceed $2,500 as a local penalty as determined by the State Revenue Commissioner. Now, this is one of many affidavits we're going to look at this afternoon, and they all should have this language on there, because all we have to make determinations are of what the taxpayer tells us in lots of cases. So there's also an opt-in letter. Oh, back to this affidavit. Let me go back. This affidavit is saying I want to opt in. We've had some counties request that we put a checkbox on here that says I do not want to opt in. So that if you've talked to the taxpayer and you've walked through the process and the taxpayer says, no, never mind, I don't really want to do that. And then they come back after the first of the year in 2014 and say, but I wanted to opt in. You at least have some coverage that, yeah, we had this conversation. Now, the problem is you're not going to have that conversation with everybody, right? You're only going to have that conversation with the ones who actually come into the office. So we probably will add that. It just may not be there March 1st. There's nothing wrong with you handing them this affidavit if they say they don't want to, and just say, how about right on here, I don't choose to opt in. Now, if I came into your office in June and you walked me through this process and said, well, Ms. Lambert, do you want to opt in? And I said, no, I don't think I want to. Because I might think that you're trying to sell me a bill of goods, and at the end of the day, it wasn't going to benefit me much. So I had to go home and think about it. Now, I might have signed and said, hey, I don't want to opt in. If I come back to your office December the 31st, I can still opt in. Now, I said I didn't want to back here, but until December, close of business on December 31st, that window is still open to me to opt in. So I just kind of put that out there as something to think about. Then I can change my mind. Now, interestingly enough, once they opt in, there's really not any way to kind of opt back out. But I don't know why anybody would really want to, particularly if they bought at a dealer and, you know, they didn't pay anything anyway, and they weren't going to have to pay anything going forward. I'm not sure why they wouldn't want to. Now, you should have gotten an email over the last few weeks about the opportunity to mail a letter to your taxpayer saying, hey, you're a taxpayer who bought a new vehicle. You have the opportunity to opt in. There's a couple of advantages to doing this, and whether you do it or don't do it is totally your call. Number one, you have to foot the bill, because I don't have the money to do it, as much as I would love to do that for you. I just simply don't have the budget money. One of the things about doing this letter is maybe you can control the number of folks coming into your office. There was some conversation about let's just blitz it out and do it all at one time. And I went, you have got to be kidding. You don't want to do that to those folks. They'll have lines wrapped around the courthouse because if people get a letter that says, you know, March 1st, opt in, they're going to come in. You don't really want them all there March 1st. You quite frankly don't want them there the next Monday or the next week while everybody's getting used to this. So the one thing about doing this letter, at least you're not notifying the world at that time. Because there is a schedule. These will go out on the same schedule that renewal notices, so hopefully you catch the person before they renew. Or they could do it at the same time. So that would kind of help you manage what's going to happen in your office. Now, it's not going to stop those folks who are just sitting there waiting on March 1st, and they're going to be there when they're going to be waiting on you when you get there March 1st. They're going to be waiting on you. You're going to have a handful of folks who think they have to do it March 1st. There's just no way around that. This letter is also available that you can pull up in Gratis. I think a couple of you have already stumbled across it to where you can send it out, but you kind of have to have that taxpayer there and know it's not like a batch run you can pull. Now this is what the notification schedule would look like if you opt to go with that, will be that if you mail a letter out in March of 2013, it will be for your June business renewals. And in March 2013, we'll catch your May individual renewals. So we've kind of missed that window in January to catch a lot of these folks, but you will be able to catch most of them going forward. Also, if you notice in October, it looks like there's a whole bunch of busyness in that. Basically, what happens in October is we try to catch everybody, even through that next first part of the year, to make sure they understand they have to be in there by December 31st. But again, this is your option whether or not you want to send them. We've just made it available as something. The last thing you want people saying, well, I didn't know, you didn't tell me.
That's in branch administration, the letter.
I didn't say that because you know I don't know.
I've looked for it and I haven't been able to find it.
It's not there yet. We're trying to get all the letters and stuff in.
Okay, Crystal says it's not there yet. It must be in the test. Somebody saw it somewhere though.
Somebody had mentioned last week that
I know, somebody found it. Okay.
It's on each record. Yes.
So if you're dealing with that taxpayer, also we'll talk about it a little bit later. It may be on this next slide.
But if we want to pull it out and mail it out, where do we find it? If we want to
That's the only way to do it right now is on an individual basis. It's not in there as a batch of letters.
Okay.
Not yet. And I'm not sure how quickly we could even do that. But if you're dealing with that customer at your window, Gratis was going to tell you, hey, you have an opt-in customer in front of you. So you'll be able to have that conversation. Again, that's going to extend that transaction time, right? And this is where it's important that all your clerks, I know you can't necessarily bring all your clerks to a training class. Now some of you have closed your office and everybody's here, right? But some haven't, and some are just so large that they will never be able to get all their folks in. Somebody's got to go home and make sure every clerk on the line knows this. So that's your job. You're the trainer? That's the trainer. All right. If they go on the website to do online renewal, they will also get a message that says, hey, you're an opt-in folk, you need to go talk to the county. So they'll get that message. For those who go through the IVR, the customer's not going to know it. We couldn't handle that. So those customers are going to get through and won't know that they could opt in. So that's basically the opt-in process. Now when Crystal gets up here in a little bit, she'll actually walk you through walking through a transaction with an opt-in. Now let's talk about our family. By definition, and this is the statute definition, it's immediate family member means spouse, parent, child, sibling, grandparent, or grandchild. By extension, that also means stepchildren and stepparents and that kind of thing. So these are our family. These are the folks who may be entitled to a different rate if we transfer a vehicle. If the family member chooses to opt in, guess what? We have another affidavit that says, I am a family member. I meet this definition. It's going to be interesting when you find out some folks you didn't know were related to folks. Okay? You didn't know that was that person's child or something like that. But, all right, if the vehicle is one that is not in TAVT, it's a vehicle I own today, not an opt-in vehicle, just one I own today, after March 1st, should I transfer that to a family member? It would be that family member's option whether they want to opt in to the new system or they just want to remain in the old ad valorem tax system. They get to choose. If they want to opt in, they have to pay the full freight, the full rate, times the value of the vehicle. I had a conversation earlier today about deciding when to transfer a car to a family member. A lot of that will depend on, on this opt-in decision. How long do you plan to keep the vehicle? If you plan to keep it for a while, you may want to pay the opt-in if you happen to have that kind of money in your pocket. Might be worth it. To a lot of us, coming up with a couple of $100s now and a couple of $100 next year might be easier than coming up with $600 all at one time. So if they opt in decide to go to the new system, the TAVT system, they have to pay the full ad valorem tax. But if the vehicle was one that's in TAVT, so it's an after March 1st purchase, or one that I opted in because I qualified to opt in, I am in the TAVT system. So now I can transfer this to a family member at a reduced rate. And it's 1/2 of 1%. So whatever the value of the vehicle is, I can pay 1/2 of 1%. Reduce that value to 1/2 of 1%, and that's what you're going to pay. Now, again, I told you we have an affidavit. So let's look at the options here, just sort of outlined in a little bit cuter frame here. The vehicle's in the old system. The new owner may elect to remain in the old, or agree in writing to pay the tax due, the value times the rate. In this case, and this may be where the $300 came from, in this case it's a $5,000 value times 6.5%. It would cost this taxpayer $325 to opt in and to be in the new system. Now, if that vehicle were already in the new system, then he gets to pay 1/2 of 1%. So for $25, he now it stays in the new system. He doesn't have a choice. He has to stay in the new system. He just is allowed to do that by paying a much reduced rate. He can't decide, well, I don't want to pay $25. I want to go back to the old ad valorem world. Once you're in TAVT, you're in TAVT. Cindy?
So is it a true statement that a title transfer can be processed after March 1st? A title transfer, a Georgia title transfer in that case, and no TAVT tax collected at that time? Because they would
Yes.
remain under the ad valorem
Yes.
law?
If they're related, if they're family, and they say they're family.
So that would be an instance where a Georgia title transfer is done after March 1st.
Right.
Then the TAVT does not kick in.
That is a true statement. That applies to inheritance too. It's an inheritance again from a family member.
They're going to have to prove that they're family, they're just going to tell them.
They have to prove they're signing an affidavit that says they're family.
Affidavit is the proof that they're gonna have to give us.
That's it. No, we can't make them give us a DNA. I don't think you want to have them bring you a birth certificate. Again, that could be embarrassing to some folks.
Small towns, we're going to know.
You're going to know. Those of you in larger towns, you may know because you've heard this statement made several times. Crooks are kind of crooks aren't very smart sometimes. They're going to go bragging to the wrong person about what they did, and somebody's going to blow the whistle on them. And you're going to find out that they really think they pulled something over, and we're going to talk about what you could do about that should you discover that down the road. But basically, this person is signing and attesting to, under that penalty provision that we looked at a while ago, that they are telling you the truth.
That you're talking about?
Mm-hmm.
I guess you said the first one's may not be in there by March 1st. Are all of these going to be
Yes,
there?
yeah. The only thing that won't be there in that opt-in affidavit may be the checkbox that says, I don't want to opt in. The actual affidavit itself will be there. At some point, I will provide you a copy and a list of all the new all the new forms and gratis for this, and all the new reports. But some of those are still being designed. But we'll get those to you. Yes.
Is this slideshow online already?
It is online. It was posted yesterday, and I didn't change it last night, so it's still the one. Now, it may change next week when something else comes up. Couldn't get into it? Either one of them, or just the one that was posted yesterday?
I had the first one this yesterday. I didn't see this one.
Okay, we'll go back and check with our IT folks and make sure it got put out there right. Now, there's a flag in gratis. When the person comes in and says, this is a family transfer, there's an indicator in gratis that you have to say, is it a family transfer or is it an inheritance? And you have to either put in, what Crystal will show you in a minute, whatever those indicators are. And then it's automatically going to change the rate for you if it's in the TAVT system. It's going to automatically say, okay, whoops, this is family, so I know my rate is reduced to the 1/2 of 1%, so the amount you need to collect will be there for you at that reduced rate. So you don't, as Crystal told the group yesterday, you don't need your calculator.
I wrote the question down last week and I failed to write the answer.
Did I answer it?
I think you did, but I swear.
Well, let's see if I give you the same answer today I gave you last week.
Well, if you tell me something different, I'll never know.
Yeah, but somebody here will know.
These affidavits, when you're processing these transactions, they're not going to print. We're gonna have to print those affidavits, right?
Yes.
We send these affidavits in with our gratis paperwork, or we keep them on file in our office?
You may keep them on file in your office. That's just one more piece of paper I don't have to scan if you don't send it to me. Ma'am? How long? Well, let's think about a couple of things when we talk about records retention. What's the refund statute?
30 days.
Refund statute?
3 years.
3 years. Actually, within 3 years of the date of the payment, right? So it's 3 years. Also, if you were going to go back and assess a penalty, typically, how long would you go back to do something? My suggestion on these is 3 years from the date, just to cover yourself. Now, you can send these to us and we will scan them and they'll be there forever once we get them scanned, if you want to. Yes, ma'am?
It says inheritance or family transfer. Does the inheritance have to be from a family?
Yes, has to be the same immediate family. If it's an inheritance from anybody that's not immediate family, it doesn't, it's just subject to the regular TAVT. Okay. Yes, ma'am?
Family transfers, you can take, a person can sell it to the family member even after March 1st, not paying the TAV tax. Can they do that a second time or only one time?
As long as it's transferring to immediate family, there is no limit. So I could take the same car and, I could sell it, you could sell the car to a child, that child could sell it to a child. As long as the transfer is between two immediate family members, back to our definition, they're just going to stay in the ad valorem system until the car goes to the crusher at that rate. This is the affidavit. This is actually just the affidavit of inheritance. They're working on combining this form so you don't have to figure out, you can just pull up, you don't have 2 extra forms. You only have 1 extra form, so that you would use the same form for either one. So I'm not going to take the time to show you this one because I know it's going to change a little bit. But again, that same penalty provision is listed in this one, $2,500 state, $2,500. And those penalties are split between state and local, because that's a case where if it's a $2,500 state penalty and a $2,500 local penalty, we don't split that by that percentage we talked about earlier, that we're going to take 57% is into the state. All $2,500 state penalty goes to the state, and all the $2,500 local penalty would go into the local bucket to then be distributed out. So that's why in the statute, if you ever really are bored and want to read something to put you straight to sleep, you'll see lots of things referred to as the local penalty is X and the state penalty is Y, because those penalties go into each person's payout at their full value, whatever that is. So again, like I say, if you ever have trouble sleeping, pull you a copy of this bill. Have a light read. All right, loaner vehicles. You guys know what a loaner vehicle is? First of all, the dealership has to have a loaner vehicle because they need something for a person to ride around in if they're getting their car repaired and they're not going to be able to get the car back to them, and they don't want to listen to you fuss all day, so they're going to give you a car so you can leave the dealership. So you're not going up to the window every 20 minutes saying, when's my car going to be done? They do this with my husband all the time because they don't want to put up with him. So they'll give him a car and say, go do what you need to do, or take it home and come back tomorrow and we'll have your car fixed. Now, the dealer takes the car out of inventory temporarily. He goes in and he gets a title and he titles and registers and puts a plate on this vehicle. He cannot loan somebody the vehicle that has a dealer plate on it. That'll get you in trouble. Only a person who works for the dealership should drive a vehicle with a dealer plate on it. Now, we all know that never happens outside of that, right? They also are not supposed to put that little drive-on tag that says, I'm ABC dealer, and drive around on that. So they actually put a car that the dealership owns. Now, this says it's going to be used as a courtesy vehicle at no charge for a period not to exceed 30 days within a calendar year to any one customer. Now, who's going to police that? Do you know who they let that car go out to? You don't. But that's the statutory definition of what a loaner vehicle is. So now we know what the vehicle is. Why does it matter? Well, the dealership needs a vehicle, so he's going to pull one out of inventory, or if it's a new car dealer, the manufacturer may have given them a car that says, this is your loaner car. You're going to use this as a loaner vehicle. So they're going to take it, and they're going to walk into your office, and they're going to tell you, I need to title and register this vehicle. Now, they don't want to pay 6.5% of the value of that vehicle. And back to our conversation this morning, who was sort of helping with this legislation? The dealers, okay? So they've said, okay, with this car, if I only keep it as a loaner for no more than 180 days, I am going to title and register this vehicle, and I'm not going to pay any title ad valorem tax. So they're going to come in and you're going to process it for the cost of the title and the cost of the registration. Here's another case, Cindy, that you would have a situation after March 1 that you have a vehicle that's not going to pay TAVT. Now, you see on my little arrow going up in the middle there, if the dealer returns that vehicle to inventory within that 180-day period, everybody's happy. But if he keeps that vehicle out of dealer inventory for over 180 days, he now owes the full TAVT tax.
Who's going to regulate that?
You are. All right, and you're going to send a friendly letter to this dealer to say you owe me. Now, this is kind of like you being late paying out. It's probably not going to happen to that dealer but one time, right? Now, how do you know he's turned it back in? He would turn the tag in, or he would come in and say, you know, I'm putting this one back in inventory and I want to transfer, let me get another one and put it in dealer inventory, right? So they're under some responsibility. First of all, they have to tell you it's a loaner vehicle or you're going to charge the full rate. So they're under some responsibility to tell you, hey, I'm a loaner. Now, the dealers themselves have said, we think we need a form. They didn't even wait for us to do it. They want something that they're bringing in to say this is a loaner. I said, great, if you want one, why don't you design it? And we'll look at it and see if we like it. So that's being worked on right now. So there'll probably be something that you will be used to seeing if you deal with a lot of dealers that they would bring you. Now this is walking through the process, and I'm not sure how easy that is for you guys to see, but basically the top line is they register the vehicle. If they haven't kept it out more than 180 days, the process ends. You know, that vehicle is back in dealer inventory. You'll notice here, if I can point to it, there's an on-demand report that you can pull to see how many vehicles you actually have out in dealer inventory, as dealer loaners, and what their status is. How many days they've been out, what day they went out, what vehicle it is. So you have the ability to pull that whenever you want to. Now, if it's been out longer than 180 days, there's now a free-form letter in Gratis that you can send this dude and say, hey, you owe me. And you owe me X because this vehicle is valued at some number times the title rate. If he pays you within 30 days, everybody's happy. Now, again, he also needs to relinquish that plate because well, of course, if he pays it, he doesn't have to, right? Because it's now just his car. He can do with it what he wants to. So, but if he doesn't pay you, then you're going to have to generate another letter and send him, and that just continues to go on until you finally get that vehicle. It also is going to calculate 10% penalty if he doesn't pay it timely. So now he not only owes the TAVT, he owes 10% of the TAVT, plus he's going to start owing interest at 1% per month. Again, I don't think it's likely to happen more than once. Now, this is one that I think we'll probably see a legislative change because apparently, and I don't know a lot about the dealer world, there are manufacturer agreements with some of the dealers that they are required to keep a car in as a loaner car for up to a year. So we may well see a change in this one, but this would be an easy change for us to manage in Gratis. And for you, just means a little more tracking. If something's out there a year, you just have longer. Now this is a report and it's probably not real clear, but basically it's listing the dealer number, the VIN number, the date the vehicle was registered, how many days that car has been in loaner status. And on that first line up there, it's really hard for you to see, there's zeros because that car has only been in loaner status for, I don't know if that's 18 or 10, but whatever it is, it's less than 180. So there's nothing due at this point. On those next two, you see dollars out there, right? Because one of those has been actually out in loaner status today, 181 days. So on day 181, he now owes TAVT, and the other one has been in loaner status a little bit longer. This will also calculate penalties and interest that are due. So this will give you some way to help track those vehicles and keep that going. All right, let's talk about another group that's going to get special treatment. This is a vehicle donated to a nonprofit. Nonprofit being somebody who has a 501c3 from the Internal Revenue Code, and this vehicle is donated to the nonprofit for the purpose of being transferred to another person. And when the vehicle is titled to the nonprofit, it's going to be subject to a reduced rate of 1% of the value times the value of the vehicle. This would be an example of some organization, I'm using Tommy Nobis here, that somebody will donate a car to. Perhaps that organization does on-the-job training, these vehicles are repaired, and because typically when they're donated, often they're not running or they're not in great shape. As part of a job training program, the vehicle is repaired. The vehicle is sold after being repaired, and the money, of course, would go back into the organization. Now, why would they have a reduced rate? First of all, you're dealing with a nonprofit, right? Second of all, are you not dealing with a vehicle that's probably not in great shape? So you've got a couple of reasons here. Now, who's going to ask the question? Okay, I'll wait till y'all ask it. I won't get there.
Are you talking about what happens when it's given to that other person?
Well, whether it's given or sold, on the other end, it's subject to full title tax. So when it goes out of the name of the organization to this new owner, it's now subject to full title tax.
We have no longer bound within the county, but they have a dealer number, so they don't typically retitle the vehicles into their. Will this require them to
No.
do that?
No.
They won't have to even pay the 1%?
No, they wouldn't have to pay the 1%. Says that they have no longer bound, and they have a dealer number, so they're doing the dealer assignment. And so they're not actually changing that title until they're selling it. Now, when they sell it on the other end, or even don't give it to someone on the other end, there is a title tax associated with that transaction.
Have a nonprofit that they donate that vehicle for a write-off of their taxes or whatever. Nonprofit's going to use it for that.
It's not exempt.
6.5%,
Right. The problem I have with this one is, how do you know? Are you going to track that vehicle that is titled to that nonprofit to what happens on the other side?
If they register it and get a tag for it?
Yeah. But they're going to continue to renew that, I suppose. But are you going to track that it ever really gets sold to someone else? I mean, I think this one has, the more I've talked about it over the last few days, there's some things that I can see that, you know, they're saying, I'm donating it to this nonprofit and this is what's going to happen, but there's nothing in there that says if this doesn't happen, what happens? It's just kind of open-ended that this is the process, and so that's what's going to happen. So if it never gets donated and it just stays in the name of the nonprofit, it just stays in the name of the nonprofit, I guess. Because I'm not even sure that you have any leverage unless you knew it was an out-and-out falsehood that it was going to be used for this purpose to do anything about it. So this is one that to me is a little bit troublesome, and it's kind of come to me the more I've talked about it over the last few days and thought about it. Some of this stuff looks really good when you first read over it, and then you start really thinking about getting into those transactions. This is
Go to any county too, so you
sure.
have, I mean, you know.
Absolutely. The nonprofit could be in Cindy's county, in White County, and that could be where that initial transaction occurred, but they sell it to somebody that lives in your county. Or they give it, or however it gets there. So this one, I think, is one that we may need to try to develop some rules and regs around this, or some business rules. It's one of those I think we're going to have to let play out a little bit to figure out what the problems are with it. Again, we have an affidavit. I know you're surprised about that. This affidavit basically says, I am a 501c3, and in fact, they're going to bring you a copy of that 501c3. They need to bring you, they have that certificate from IRS. You're also going to want a picture ID of the applicant, and this is in rules and regulations too. And under the affidavit, they're basically in this affidavit attesting to, I am a nonprofit, this car is being given to me, and I'm going to do something with it. It's not going to stay in my ownership. At some point, it's going to transfer out of my ownership. Again, this is one of those affidavits that they're attesting to something, so if you find out down the road that they weren't telling the old truth, would be a situation that you might want to talk about one of those penalties that we talked about earlier. I don't know that there are a lot of these transactions, but apparently there were enough that somebody got this in the code section. All right, some of you have rental car lots in your county and the vehicles are registered in your county, right? Well, you have to know what a rental vehicle is to know what the treatment is. First of all, a rental motor vehicle means a motor vehicle designed to carry 10 or fewer passengers and used primarily for the transportation of persons, and that vehicle is rented or leased without a driver. So what we're talking about here is you've had a little fender bender, your car is being repaired, and you have to rent something to drive around in for a few days. So in order for it to qualify for some sort of different treatment than normal TAVT, it also has to belong to a rental motor vehicle concern, which means a person or entity that owns and leases 5 or more vehicles and regularly rents these vehicles to the public for value. Okay? You're going to feel better about this one in a minute. I promise. Now, there's a special rate for these cars if the owner is certified by the Revenue Commissioner as a rental motor vehicle concern. So you do not have to try to figure out if they qualify for special treatment, because they're going to have a document that says, I am a rental motor vehicle concern, and because of that, I get to title and register this vehicle in my name for what equates to 1.5%. So I knew you'd feel better about that you weren't the ones trying to figure this out. So in this example, this rental car would pay $300 in title ad valorem tax and be registered and titled to the owner of the vehicle. Now, why would they get a special deal? They don't keep them forever. First of all, when they buy them, they don't pay sales and use tax when they buy that vehicle, because they buy for resale. So they're exempt on that front transaction, and then because they don't keep them forever, when they sell it at the end of their life with it, it is then subject to sales and use tax. What else happens when you rent that car? I pay sales tax. That's right. I have to pay sales tax. They're charging me $39.95 a day. I'm going to pay 7% sales tax on that vehicle for every day that I drive that car. So they are collecting that monthly sales and use tax. So because of those reasons, legislature said, you know, we need to kind of level the playing field here. So, but the other thing is, they also have to be able to determine that for the vehicles in their fleet, they have paid at least $400 per vehicle, or collected and paid in at least $400 per vehicle on average for every vehicle they have. So if they have 400 cars times $400 is $16,000 that they would have collected that. So their rental car company, rental motor vehicle concern, and they're going to go out to our website and they're going to find the form they need to fill out, in this case not an affidavit but a certification form. And they're going to complete that form and they're going to submit to us certain sales tax documents that we're going to require. This will be reviewed by our folks in the Office of Tax Policy, actually. It'll come to the Motor Vehicle Division, we'll forward it to Tax Policy, they'll send it back to us, and at a point we're going to put into gratis that this company, ABC Rental, is now a certified motor vehicle, rental motor vehicle concern. And so vehicles titled to that company will be subject to this special rate. I hope that at some point you will have that list just like you do for self-insured, where you can go out there and look. They only have to do this once a year, but once a year they have to come through this certification process. The nice thing for you is they have the certificate, so all you have to do is, again, flag it in Gratis as a rental car, and Gratis will convert over and show you the amount due at this reduced rate. So from your side, it's going to be pretty simple. About time something was, right? All right, these are the things that are exempt. We in government, state government, local government, are just opposed to taxing ourselves, right? We're just not going to do it. So we're all exempt. State, county, consolidated government, municipalities, county or independent school systems, or any other government entity such as an authority. They won't pay title ad valorem tax. They don't pay ad valorem tax today, do they? Okay, so they're exempt. The TAVT is not applicable to a couple of other things. A corrected title. What in your world is a corrected title?
Adeline, take a lien off,
Adeline, take a lien off.
take a married name,
Change it a name from a married.
removing a second.
Adding or removing a second owner. Hold that thought, because we're going to debate that one a little bit, okay? Could change the way I spell my name. You could odometer reading, color, several things could be a corrected title, right? The replacement title is what would happen if you lost your title, or as in my case, my puppy ate it. Because I assure you, if it landed on the floor, Lucy would eat it. And you have titles issued to the same owner. I took a lien off, added a lien on, it's still my title, right? That's really titles issued to the same owner. Let's go back and talk about adding and taking people off. We've had some lively debate about this over the last few days. I thought I was going to get stoned at one place. It got a little bit livelier than I was prepared for. I have two people on the title. I drop one, and I agree that that can be a corrected title. Okay? But now I add somebody. Huh? All right. And to take that a step further, if I don't consider that a new title, now I'm going to drop this owner, and I'm going to keep this owner, and I'm going to add a new owner. And now I'm going to drop this owner, I'm going to leave this owner, and I've just transferred a vehicle totally from A to B or C, and I never paid title tax. You need to be very, very careful. Gratis is going to do this. If you add an owner, it's title tax. It is a new title and a new transaction. I'm glad y'all agree, because it got lively in Lawrenceville the other day. I wanted to hide behind the podium, only it wasn't big enough to block me. Yes, ma'am.
So if the primary owner remains the same
Yes.
throughout four transfers,
Uh-huh.
it would charge that title tax each individual time. If the primary owner remains the same.
Name one.
I'm not saying this is going to make you popular. I'm just saying that this is one that can get very tricky, and I can see a loophole here real quick. If you guys don't really watch how you're handling this, that you could get that vehicle from my name over to your name. We're not related, total new transaction, and that nobody would have ever paid paid the TAVT.
What I'm saying is,
New owner, if you add an owner, it's a new transaction. Yes, ma'am.
And we're going to take away, like say, me and my husband are on my title, and God forbid he passes away, but he's owner one.
Okay. You can, that transaction can occur because there's a way, and it's for those of you who know Gratis better than I do, that you can treat that as a corrected title and even
If you just take the second owner off,
take second owner. We're okay with you dropping an owner. We're just not okay with you adding an owner.
No matter if it the primary or the secondary?
So even if the primary stays the same, like if I was a primary and I wanted to add her as my secondary, I would have to pay the title tax.
Yeah, because the next thing you know, you drop off and she owns your car and never paid title tax. That's our fear. So, like I say, it got extremely lively in Lawrenceville the other day because, you know, this is one of those business rules that you guys are handling all kinds of ways out there, just depending on the circumstances. So, my caveat to you is be very, very careful because whose money are you giving away? Taxpayers, county money. You know, the money that operates the county and gets those fire trucks running, set aside your salary, but that money that is running the fire trucks and the police department and keeping the schools. So you need to be very, very careful when you decide somebody doesn't need to pay. Now, nobody's asked me the obvious question yet. And those of you some of you, this is your second or third time around, so you've already asked it. Nobody's asked me the obvious question yet about exemptions. Who do you not see up here anywhere? Churches. Churches are not exempt from title ad valorem tax. Ooh. Now, today, if a church went and bought a bus, they're not exempt from sales tax. They are exempt from ad valorem tax on that church bus, but they're not exempt from ad valorem tax. Same thing is true of another type of a charitable nonprofit charity that doesn't fall into that specific bucket that we have an exemption for, wouldn't be exempt. Okay? So a few exemptions that exist out there in the property tax statute didn't get carried over into title ad valorem tax. We've had some lively debate about the churches too, so. Now, we do have some veterans exemptions that are part of this statute. There's a service-connected disability exemption that exists today in sales tax. And that is when a veteran receives a grant from Department of Veterans Affairs to purchase and specially adapt a vehicle. Perhaps this veteran no longer has use of his legs, and so the vehicle needs to be adapted to have hand controls. These are the kind of grants we're talking about, or other adaptions that would be. Now, they would have to submit the exemption affidavit, the motor vehicle agreement or bill of sale, because on that bill of sale you would be able to see how much that grant was, because it would be applied on that bill of sale. And this says other documentation required by the commissioner. We haven't come up with anything else. This may be one, well, there will be an affidavit, or there is an affidavit, but this may be one that as we kind of work through it, we see things that perhaps maybe need to be submitted. So this is one exemption. If this veteran buys a car with this grant, he's exempt from title ad valorem tax. Now, this veteran may or may not be 100% service-connected disabled. This isn't tied to that, it's tied to that grant. Now, we do have, on the next slide, another group of veterans who qualify for the exemption. Those are, the first one is the disabled veteran under the code section and ad valorem tax, which is 100% service-connected disabled, right? So if they're 100% service-connected disabled, they're exempt from title ad valorem tax. If they're a former prisoner of war, they're exempt from title ad valorem tax. If they're a veteran who is a Purple Heart recipient, they are exempt from title ad valorem tax. And they're a Medal of Honor. Now, there is one little glitch in this. In the current statute, it says owned or leased. You can't exempt it under a lease because they're not the owner. The leasing company's the owner, right? So if it's a lease, the leasing company's going to be subject to title ad valorem tax. But if he's buying it outright, then the veteran would be. Now, the reason I made a distinction there going through this list, in the last legislative session, the legislature allowed for the Purple Heart recipient who's still on active duty to receive the Purple Heart plate or be able to get a Purple Heart plate. However, the exemption in ad valorem tax was not changed. So when they picked this exemption up just out of Title 48, it only allows the exemption for the veteran who's received the Purple Heart. So the active duty service member who may have received the Purple Heart isn't entitled to the exemption. That's bad. I just think it was an oversight and probably not one anybody thought about till we started diving into this a little bit. Unremarried spouse would qualify. Okay. Unremarried spouse of some of these. Now, we looked the other day, Barbara, a couple of these don't go to the unremarried spouse. The disabled veteran does, and I think the prisoner of war does, but I don't believe the Purple Heart does. It does? Well, then one of the, is it the POW that doesn't? I think there's one that doesn't. And there are currently no Medal of Honor recipients that at least have plates.
We had a customer yesterday.
Mm-hmm.
I think he was Bronze Medal of Honor or something like that.
Bronze Star?
Bronze Star. We could not find that anywhere in our manual. He's there with his little booklet from the state saying we have a free tag for him. We couldn't find any codes.
I think we have a
We
bronze.
tried to call help desk and
Couldn't get through. Yesterday was a bad day on the help desk. I'm glad I was on the road.
but I don't know what to do with him because we couldn't find him in our manual.
We have a Bronze Star, or we should have.
He moved here from another state.
Uh-huh.
So we're trying to find out what we can do. We couldn't find a code where we could even do it with temporary. We can do
Well, you know, in the last legislative session, the legislature listed this whole list of awards. And then there should be, and we're working on that now. So it may be that we just don't have it yet, Barbara. And we also will have it where he can get it for whatever branch of service he was in. So if he was awarded it for the Army, then he would have an Army plate with the Bronze Star.
And he was a pretty nice guy, but let me tell you, his wife was not. She wanted him to have it, but she wouldn't have it.
Well, she can come down and help us get that worked out, because we're going to have to handle that, and it's kind of off the subject, but just so you know, we're going to have to handle that kind of like you handle NASCAR plates today. You have NASCAR, and then you pull it down, and then you have this pull-down list. In this case, we almost have to have the military, then you have to have a pull-down for the branch of service, and then you're going to have to have a pull-down for the award. So it's a little bit more programming to get that plate for you to be able to even ask for it.
Well, I'll call him back tomorrow and tell him they're working.
Tell him we're working on it. Give him Crystal's name, not mine.
I have a question that's a little off subject. I have a lot of police officers come in, and they are asking for a police officer tag, because there's a firefighter tag. Is that something that the state has thought about doing?
Well, there's only two ways they can get a plate. One is they have to come up with $25,000 and get their own plate, or they're going to have to go to the legislature and say, hey, we want a plate. So that's the only two ways that they can get a plate out there.
We have a firefighter plate.
Right.
We have a lot of law enforcement.
Right.
They're like, well, if they have their own plate, why can't we have ours?
Well, they certainly can. They just need to go talk to the right legislature and have that legislation introduced. I think they should have one. Now, that might make them a target. They might want to be careful what they wish for out there.
Yeah.
Okay? That's just Vicky talking. That wasn't a paid announcement or the department's opinion. Yes, ma'am?
One question, going back to the 501c3.
I can't hear, please. That's okay.
Going back to the 501c3, I had two different responses, and I'm not sure which one was correct. If they title and tag it for use as a 501c3, the TABT applies. Did I understand
Yes.
that correctly? Okay.
Do you want to know if they title it and use it for the nonprofit? I'll give you an example that came up in training. You have a humane society or group that's running your humane society, but they're not county. They're a private group. Somebody gives them a vehicle to use, or they buy one. There's nothing in this statute that I see that would make that group exempt. even though they may be a 501c3 organization, but they're using that vehicle. So that's back to Cindy's example earlier. So any more questions about the veterans? We've wrestled with this one for a lot of reasons. Yes, ma'am.
I know on Purple Heart tags, you can have one free. You get a second one to pay for it. If someone is 100% service-related disabled and is a Purple Heart recipient, are they entitled to have one free of each?
I wouldn't tell them no. I don't know that they're. Her question was, if you have a 100% disabled veteran who also is a Purple Heart recipient, he's entitled to have one Purple Heart plate free, has a disabled plate free. She said, were they entitled to have both? I wouldn't tell him no. Now, he's got to have two vehicles. He's got to have one to put them on. Yes, ma'am.
Along those same lines, what if they have, because you can issue a second disabled plate for the disabled people, but it's not completely free. Like you get the one free one, and the other one that's free, but you still pay the application tax. If they do that, they're only exempt from the tax for the one vehicle.
All right, but let's talk about the free and the free, because part of free. All right, the one that is free is a disabled veteran, but he's not 100% disabled. He doesn't qualify here. This is the 100% disabled veteran, same one who would be exempt from, typically would get the homestead exemption for being the disabled veteran. So that's the veteran we're talking about here. So it's not just tied to the plate, it's got to be tied to the qualifications that you meet what these statutes say. And again, these are in the ad valorem world, not in the motor vehicle world. An affidavit, surprise. Say, another one, right? This basically says which one they're applying under. It also will give the documents they need to provide when they are coming in. Now, we've had a lot of debate over how to handle this. One of the concepts was that the taxpayer needs to go to you, they need to get this affidavit certified, you need to okay it, and then they can go to the dealer and buy the car. Now, the problem with that is you have, in many cases, a disabled veteran. So you need to be careful how you handle this. So we've ultimately said, okay, this is what they need to have, take these documents to the dealer. In this case, the dealer will not be able to use ETR. They're going to have to get these documents to you along with the title application. And at some point, you'll be able to review that and determine for sure that it should be a disabled, that they qualify for the exemption. Trying to do that so that we're not putting folks, again, it's one of those customer service things that you want to be careful with. Now, this one can get a little bit. Talk about it. All cars purchased are exempt from the title ad valorem tax. I can buy a car if I'm one of these qualifying folks in March of 2013, and I'm exempt. I can go back into still meet the exemption, still meet all the qualifiers. I can retain that car I bought in March of 2013. I can go in 6-8 months down the road and buy another vehicle, and I'm going to be exempt from title ad valorem tax on that vehicle. Now, to take,
These are just the 100% service connected.
or any of those others, okay? Now, that vehicle was purchased under title ad valorem tax world. I'm in that world, only I was exempt because of who I am, or what my disability is, or my service award. Now I decide to transfer that car to a child. I now transfer it at the reduced rate because I'm transferring it to immediate family. Just get that out there. So they could have several, and they could have several cars as long as those vehicles are in their name, because they meet that exemption requirement. So don't think that's likely to happen, but could. They could also, the car they bought, they could put a regular plate on it, the one they bought in March of 2013. When they buy a new vehicle, they probably want to put their plate on the new vehicle, right? They can put a regular plate on the other vehicle. And still, there's nothing in there, because the ownership hasn't changed, to trigger paying that tax again. So, just want to kind of... She would be exempt. You'd have to pay the... Yep. Yes, somebody had a question. Yes, ma'am? The unremarried surviving spouses.
So if the veteran dies and the lights go out, still stand by?
I think so, as long as she's unremarried. She can.
She can still transfer to another child.
Right. Now, all of these don't have that they're applicable to the unremarried surviving spouse. We can go back and look at those. I didn't bring my law book in this morning, so I don't have it with me, but...
I'm a little confused.
Okay.
I'm gonna do this. I'm gonna go buy a new truck in March.
Mm-hmm.
Well, the veterans never been exempt from sales tax.
Right.
Are you telling me that I'm gonna be exempt from the sales tax?
If you qualify under one of these
Yeah.
right here, then you will be exempt from title ad valorem tax.
And how's the dealer gonna know that?
You're going to have to take these documents with you. You're going to have to take this affidavit and these documents with you. And this is where I'm hoping the veterans folks are going to help us educate their constituents so that the veterans know. Because I don't want you to get into situations of having to make lots of refunds because the veteran didn't know about it and then they find out later. This one again is a little bit tricky. You're going to need to take your affidavit and your documents to the dealer, because when the dealer goes to apply for that title for you, they need to present those documents to Haralson County so you can review them and decide you're eligible for it.
Yeah, and since they've never been exempt from sales tax.
Right, they're not exempt. The only ones that were exempt from sales tax were where they were having the vehicle adapted. But what they did was they pulled these ad valorem tax exemptions out and said, okay, we're going to make them apply to the title ad valorem tax.
This only bunch is really saving money,
Right.
where they're not swapping.
That's right. So, now let's really get into it. And some of you that haven't been to anything since last week, there's a lot of you in here who could be up here teaching this because you've sat through it and you've worked through it. I didn't talk about this last week because I didn't want to talk about it. Because I wasn't sure I had all the answers, and I'm still not 100% sure I have all the answers or that I'm comfortable with the answers. But I'm going to give you the best answers I have. And we will come out with some more information on this one. But we have active duty military. This tax will not be imposed on a non-resident service member. A non-resident service member is an active member of the armed services who is stationed in Georgia but is not a resident of Georgia. Okay? They come to you now and they have a form signed by their commanding officer that says, Soldier A is in Georgia on active duty, but his home of residence is probably either Texas or Florida. One of the two, because they don't have income tax, right? But they are not declaring Georgia as their home of residence, so today you register that vehicle and they pay no ad valorem tax, right? Under this bill, we're saying they can still come to you as a non-resident, and you're going to register that vehicle. You may title that vehicle here in Georgia, but it is not going to be subject to title ad valorem tax because they are not a Georgia resident. Now, Gladys is going to give you a new exemption code. It's not in there yet because this is pretty new to us, which is NS, which stands for non-resident service member. Once that's selected, the purchaser is going to be exempt from the title ad valorem tax. They still have to furnish you that same document that says, I am active duty. stationed here in Georgia, but Georgia's not my home of record. They're going to be subject to the same title and registration fee that you would charge them now to do that work. You're going to move them. It's going to appear that they're in the new title ad valorem tax system because everything occurred after this March 1 date. So that's where they have to be because they're a titled vehicle. So they're going to appear to be in the title ad valorem tax world. Now, these service members may still be required to pay sales tax depending on the circumstances, because the sales tax exemption extends to vehicles who are subject to the title ad valorem tax. So I'm not sure they're saving anything. But if they bought a car in Georgia today, it would be subject to sales tax if they're going to title it and register it in Georgia, or they're going to have to pay the sales tax for wherever the vehicle is going to be titled. This one still troubles me a little bit, and a lot of it is I'm just not sure I've got my arms wrapped around it. But if they're declaring Georgia as not their county, it's not their home, whatever that is I'm trying to say, they don't live here, then you're going to treat them just like you would today. They're going to be exempt from title ad valorem tax just like they're exempt from ad valorem tax today. Does that help you, Mark? Sort of? Yes, Barbara?
Is that based on the first registered owner?
If you read the Service Member Civil Relief Act, if that soldier has ownership in that vehicle, it applies to that vehicle, whether he's first owner or second owner. You guys have gotten yourselves in some trouble with that in the past. And it's not just one vehicle, folks. It can be more than one vehicle. You've gotten me in trouble with some of this with the veterans folks, like your folks aren't doing this right. So again, this is one that we will send out some additional information to help you walk through this and to make sure that we've got an information bulletin out there. Because again, I didn't talk about this Monday, Tuesday, Wednesday last week because I didn't want to. But Thursday, when I walked into a training session and one of the Army's attorneys was sitting in the audience, I didn't have much choice but to go ahead and kind of get it out there. He also looked at this and agreed with where we were heading with it. Did I see a hand somewhere?
It says they're going to have to know to collect the sales tax.
It will be part of our dealer guide. Okay. All right, does anybody have any questions about this one? Okay. All right, let's talk about our dealer penalties and interest. Under the current statute, the way it is written today, a dealer has 10 days to get you the title ad valorem tax and the title application. Is there anybody in this room that's ever had a dealer walk into their office within 10 days of the date of a sale and bring you all that information? I want you to stand up and be proud if they have. I haven't seen anybody yet. It just typically doesn't happen, and there are a lot of reasons for it. They can't get a lien release on the other car, the trade-in. They can't get the lien perfected on the new car. There's all kinds of reasons. It would probably only happen if I walked into the dealership with either a check in my hand to pay cash for a new car that was a bank certified fund, so they would accept it and not wait 10 days for the check to clear, or if I walked in and I had my title in my hand for the car I have and was paying cash for the one I was buying. That ain't gonna happen to me. So in most cases, meeting this 10-day deadline is something dealers have basically said we can't do. However, the way that bill is written today, if they don't file that with you within 10 days of a date of purchase, they owe a 5% penalty. So back to our example this morning of that $1,300 title tax due, on day 11 they owe $1,365. If it's not paid within another 30 days, they owe another 5%. So now they owe $1,400 and whatever the number is, my head's not working today. $30, I think $1,430. They are also subject to the 30-day penalty, which is 10%, plus 1% interest. You think they're happy? So here's one laid on top of the other one. A 5% penalty at a day 11. On day 31, we're going to put the 10% penalty on it. Day 41, there's another 5% penalty, and it just keeps going on out. I suspect we're going to see this change. I suspect it will maybe change before March 1st.
And Gratis will do this for us?
Gratis will do this for you. Fortunately, if they take away the 10-day penalty and just say we're going to take the 10-day penalty away, that's a quick change for us in Gratis, because instead of saying at 10 days we're going to add 5%, we're going to say at 10 days we're going to add 0%. That's a quick change for us. However, if you look at House Bill 80, these changes have been done to go to the 30-day and after that, but they're a flat dollar amount, not a percentage. It's a little bit more difficult from the programming side just because that's not how we programmed it. So that would take us a minute or two longer to react to. Now, I don't know, some of the changes in House Bill 80 are slated with an effective date of July the 1st, but I'm not sure they all are. So I'm not sure about this one because I just haven't sat down and tried to digest all that yet. But this is the way it exists today. This is how Gratis is programmed to start March 1st. Needless to say, they're not particularly thrilled. Now, that same 30-day penalty, though, exists on your casual sales. So if that bill of sale is March 1st, and dude didn't come in until March 31st, he's going to owe 10%, right? Again, we're already not happy, and now you're going to hit me with another 10%, only because I didn't know. And of course, their interest just keeps going on. And you're going to have some of those folks who don't come in, and you're going to be hitting them with that 10% penalty plus 1% interest per month. That if there's a penalty there now, yes. And if there's if you think they fraudulently changed that document in order to avoid paying the tax timely, that's another one of those commissioner penalties we can talk about. Somebody said they'd probably have somebody that when they walked up there and said you're late, they'd probably sit there and mark through it and write a new date. I mean, if they're blatant enough to do that, I'd be blatant enough to probably try to make a case against them. Because here they are. The commissioner penalties for fraudulent transfers and false information. The penalty we've talked about is up to $2,500 state, up to $2,500 local. Falsifying material information on the following. Now, this says falsifying a bill of sale. Had a fellow at one of the meetings who got really unhappy with me because I said we're going to use the book value in Gratis, not your bill of sale on a casual sale. You're questioning my integrity. And I said, no, sir, I'm not questioning your integrity. But I might question the integrity of some other folks out there. Then when this slide came up, he said, well, how can you say that it matters that I falsified a bill of sale? You're not going to use that value anyway. And I said, well, now wait, we could, depending on whether it was a used car that didn't appear in the book, right? Or a bill of sale where I might have changed the amount of money I received for my trade-in to therefore lessen the amount of tax I might owe. So there would be some cases where the taxpayer might gain something by falsifying a bill of sale. The other place he might gain something by falsifying a bill of sale would be altering the date, because I have now lessened the penalty I have to pay by making it look like I came in within 30 days of a date of sale. So there are reasons that you would look at that. Falsifying any material information on an affidavit, a family or an inheritance transfer. If I claim to be related and I'm not, and you know that, then you could go through this process. Because if I totally opted in, I would have paid the full freight. So you're talking about that transfer after the fact where you paid the reduced amount. Yes, ma'am?
Do you think it would be in our best interest to require notarized bills of sale now?
No. I don't think you want to go there yet. Her question was, do you think it would be in their best interest to require a notarized bill of sale? Unless the statute requires it, you're going to have a hard battle to fight over that one. So, if you have a situation that you feel like falls within something that's been falsified, you're the one that got the documents, you're the one where the transaction happened, you're going to have to be the one to start this process rolling. So the first thing you would have to do would be furnish a copy of those documents to the commissioner. And we're talking revenue commissioner here, so that they could be reviewed at the department. Some written statement about the facts and the allegations you're making against this person. And anything else that you would have. Maybe you have a statement of someone else who came in and said, hey, I know Sam down the street came in here and processed this transaction and said that this person is their daughter and they're not. So that would be that kind of situation. So then the commissioner, within 60 days, will make the determination and assess the penalty. You, again, will collect the penalty, so you're going to see this fellow that you've made really unhappy come back in to pay his penalty. Now, do we think this is going to happen? Yeah, I probably think somebody's going to try that. But again, it's going to be up to you to be the ones to be the kind of the police of this and the starting of looking into this. Because we won't know it. You're the ones that are probably going to have the information. There may be some rare occasions that somebody may call the department and blow a whistle. They do that now on sales tax and income tax things. People are always minding somebody else's business for them. We've pretty much probably talked this one to death today, but we'll talk about it just a couple of more minutes. You have the Welcome to Georgia folks. There's a code section that says these folks are supposed to register their vehicle within 30 days after becoming a resident of the state. Now, some of you do a good job of policing that now. Some of you just take their word for it when they come in the door, right? Sometimes you don't know about it until they come in and want to file for homestead. And then you ask that question, where are your vehicles registered? Oh, well, they're registered back over where I lived in Kansas. And then you can look back and see when they, there's ways to determine this. It's going to be up to you, again, to police this. When did they move to Georgia? What is your date there? But again, you're already hitting them with a pretty significant amount of money, right? They're going to have to come up with that 50% at the initial registration, pay the additional 50% within 12 months. A hold is going to go on that title. Now, are we going to have some unhappy lien holders? You betcha. And then we talked about who gets the money if the person moves. It was due in County A, so we're saying County A gets the money. County A is going to have to be the one. Now, things to think about. Will you allow multiple payments? Gladys will let you do that. Crystal will tell you if they're offering to pay, take the money. We talked about the appeal situation where they're required to pay 50% up front, and then if there's an adjustment, it'll be adjusted on that final payment. So if it gets reduced below what it was initially set, their second payment may not be 50%. It may not equal the first payment. It may be something less. Grannis will provide a reminder letter to send taxpayer after 10 months. So you can send this fellow a nice little letter, hey, don't forget me, I'm here, you still owe me money. And there's no provision for interest or penalty if the second installment is paid timely. So, they just were allowed longer to pay it without any penalty or interest being accrued. Again, this is one that I think I'm okay. I'd like to see maybe amended. I'm probably okay for them to pay something when they come here. But this seems a little bit unfriendly. Lease vehicles. Today, if I buy a vehicle and I'm going to lease it, and we're talking about those leases that are usually 24, 36, maybe 48 months on a vehicle. When I buy that vehicle to lease, I do not pay sales and use tax. It's like my rental cars, because I'm going to resell that car, so I'm actually buying it for resale, so I'm exempt from sales and use tax. However, the way TAVT is written, they're going to be subject to the same title ad valorem tax rate as everybody else. However, that monthly payment I make, if I'm leasing that car, is subject to sales and use tax, and is going to continue to be subject to sales and use tax. Also, who's the owner? The leasing company, right? So if I have a high-end vehicle, for example, that vehicle may lease more than once. So I can lease it to Mark initially, and then I can lease it to Cindy, and we haven't changed ownership. We've only changed the registrant. So there's no title ad valorem tax until I actually sell that vehicle at the end of one of those leases. Now, if I'm the lessee and I move in from out of state, guess what? I'm going to come here and try to register that vehicle. I now need a Georgia title, and I owe the tax because somebody owes the tax, but I'm the one standing in your office. So in order to register that vehicle and for you to let me apply for homestead exemption, I may have to pay that title ad valorem tax to you if I can't get the owner of the vehicle to pay it. Now, if you thought those other Welcome to Georgia folks were happy, and the problem with this one is I may pay that title ad valorem tax because the homestead exemption may mean that much to me that I want it, and I'm not even going to own the car at the end of the leasing period. Yes, if they buy at the end of the lease, they have to repay. Because the owner changed. It went from the leasing company, which is Vicky's Leasing, into your name because you bought the car. The dealers are saying this kills leasing. It did in California. It's going to in Georgia. Yes, ma'am.
Okay, I just want to make sure I understand this correctly. So I have a person who comes in with a lease.
Uh-huh.
They have to pay the 6.5%. The leasing has to pay the 6.5%.
They don't have to. It's actually due from the owner, which is the lessor.
Getting that out of them.
I didn't say it's going to be easy.
They gonna pay for us bulletproof glass.
No. But you know that admin fee that you're collecting and you're keeping, you need to ask for some of that. Clint left, so I can say that now. Yes, sir.
Hasn't there been some discussion, though, that this may get changed on these vehicles, though, for the dealers?
Yes. And I'll talk about those changes. Darla?
Is it on the full price or the residual?
It's on the full price, whatever the value is in gratis. And she's talking about the resale. Car sale, if I lease the car and I decide to buy the car at the end of the lease, they typically are going to sell it to me for a residual value, which may be less than what that car would bring on the lot. But that's not the value we're going to use. We're going to look at whatever gratis says the value of that vehicle is, and that's what we're going to charge the TAVT. Now, today, if you look at House Bill 80, the lease rate, the rate to charge on leased vehicles has been reduced to 4%, which would, in some calculations that have been done, bring in about the same amount of money that's being brought in today between the ad valorem taxes paid over the life of the lease and then the sales tax that's brought in when the vehicle sells. So they've looked at those numbers and said, we think 4% is about the right number. Now, I just heard today, however, that they may keep the rate up here where it is, only not charge the monthly sales and use tax. Now, which one of those is going to make it through, or if any of these changes make it through? I would almost like to see us not make any changes until we figure out what all the issues are. But they don't typically grant my wish.
They usually don't think it through enough.
I'm not saying that because I'm on film.
They can't seem
Yeah. All right, let's talk a little bit about ETR, and then I'm going to let you go on break. And then I'm going to put Crystal up here, and she will entertain you much more than I have. In today's world, we have ETR, which is electronic and title registration. Now, I know that sometimes you guys get frustrated with ETR. I can look at a few of you in the room and know that you get frustrated. I will say what I've said many times before. What ETR has done is open up the process. Dealers aren't really any different today than they were before we started ETR. You're just able to see it better. You can see some of the shenanigans that are going on out there that you couldn't see before. However, each of you in this room has probably been contacted by 3 different ETR vendors. And there's some misunderstanding, and first of all, the way ETR will work in the new world is that the dealership will sign up with one of these vendors. So when I've been asked a couple of times, which one of these should I do business with? That's really not the issue, because they may all 3 be doing business with somebody in your county, or one of the dealers in your county, or dealers who have customers in your county. So if you're going to do this relationship, quite frankly, I think you need to do it with all 3. And this is a one-way street. They're going to put money into your account. They're not going to be taking money out of your account. Okay, they're putting money in. So the process will work like this. Person goes into the dealership. They're going to process that paperwork. The vehicle information, all that deal information that goes in with that deal is going to the ETR vendor. The ETR vendor collects from the dealer the title ad valorem tax. If it's after that 10-day window, he's going to fire it back over to the dealer and say, add 5% to this and send it back to me, because we've got to process, we've got to have that money to process. When it comes into the ETR vendor, this whole transaction is then going to split, and documents and money are going to flow 2 ways. As you can see on this chart up here, goes into the ETR vendor. And if it's title ad valorem tax money, that money is going from the ETR vendor into your bank account. Today, the title fee and registration money is coming to us at the department, and that's going to continue in the new world. We'll still get the title money, we'll get the registration money. It's going into our bank account, and they'll still be scanning those documents, sending them into us so that you have those images out there. Once those deals are finalized, we're going to release those titles, and they'll go through. So that part, everything from here to here works just like it works today under ETR. But when they make that deposit to your account, and they're making that deposit on those same vehicles into our account, we're then going to feed all that vehicle information and that payment information into Gratis, so that Gratis knows that the car sold by dealer A to customer A, that money has transferred, and that money is now in your account. So you'll be able to look at that. It'll go from us into Gratis, and you'll be able to pull it up on your end. Now, one of the ways that you're going to be able to pull that up on your end is you can pull a report. Whenever you want to pull a report, to say, what's out there? Where did it come from, and who does it go to? So you'll have a report that says this vendor for this dealer deposited this much money in your account for this VIN number. And it'll go down the whole list. Some of the vendors have offered, if you're interested, in sending you an email to say, we've put money in your account, so that you know to go out there and look for it. Now, I don't know if they're all willing to do that, but I know some of them are. And they've also asked the question, you want to email every day whether there's anything in there or not, or do you just want to see an email when they're actually sending something? This is something you can talk to those vendors about. If you haven't already done, otherwise, this allows your dealers to be able to transfer those documents to the county where they go and get the title ad valorem tax to where they go without having to send people running all over the state. And again, it's just there. It's not required to do it. I'm just trying to make everybody's life easier. Yes, ma'am.
I have a small dealer, used car
He doesn't have to do ETR?
Like, he's getting information that, I guess.
Yeah. It's only mandatory that he issue the TOP either through the association or through one of these vendors. That is mandatory. He's got to issue that TOP through the system so that that TOP information is registered and gratis. But as far as doing the title and registration piece, he is not required to do ETR. He can run those titles. If he's got customers in 15 counties, he's got to go to 15 counties. Now, what he wants to do is bring that to you, and you process it for 15 counties. He may decide this looks a whole lot better when he has to go to 15 counties. He may just basically do business in your county.
He felt like he was pressured to have to do this.
Part of it, and one of the reasons I even included this discussion was because I know there's some even among y'all as a group, there's been some misunderstanding. Like I've had a couple of emails, which one of these vendors do I sign up with? Well, if you're going to sign up with one, I suggest you sign up with all three. It will just make the process easier for some of the dealers. Some of the dealers aren't going to do it. They're going to continue to do things the way they've always done them. All right, before we go into distributions, I think y'all need a break. I'm seeing your eyes glazed over. It is. Let's come back about 5 till 3, and I'm going to put Crystal back up. I'm going to put Crystal up for a little bit, and then I'll finish up this afternoon. So